and Bitcoin jumps back over $100,000, you're going to have a lot of people, who are actually suddenly in favor of it. These are the massive tailwinds that people are just ignoring right now. They are not priced into this asset. It's that famous quote from Rothschild where there's blood in the streets. You should be buying even if it's your own.
So today I've sat down with a recurring guest, someone who I'm thankful enough to call a friend, James Lavish. I want to jump straight off the deep end and ask you about a really interesting video I saw circulating on Twitter this week that you reposted. You were talking at a conference and you said you expect Bitcoin to tap into the $630 trillion global real estate market and the debt market. Let's open up that rabbit hole, and I want to pick your brain about what you said at that conference.
Okay, awesome. Sounds fun, Luke. It's good to be here. Always good to talk to you. Always enjoy our conversations. So thank you for having me. Yeah, I think that was at Pomp's conference up in New York. It was the Bitcoin investor conference, I think it was called, and it was a couple weeks ago. And we were talking about, Bitcoin adoption and really what we expect there, right? And so um, a lot of people get hung up around the gold demonetization of gold and how Bitcoin is going to take over gold, and they don't really think about much more than just that. Maybe, you know, how much they can get as a percentage of the risk assets of the world, and that's how it's been treated. And quite honestly, it's not wrong. It's how it's been. You can see that Bitcoin is, I like to call it the tip of the risk spear. A lot of people have heard me say that before, and it has. It's the first thing that moves when people want to either add or extract from their exposures to risk assets, meaning typically, like high flying technology stocks or just overall beta in the market. Bitcoin has a beta to that, right? So it really does move like a risk asset, and it has for a while. So what we were saying there is that if you've seen Jesse Meyer's Croesus chart of the global assets, right? The global investable assets. And it's funny because, I used to make that same exact chart and they're pretty similar, slightly different colors, but I talked to him. He's yeah, I'll give you the chart here so you can put it up on the screen right now so people can see it. But basically, this chart that he's been gracious enough to share with me and say I could use, so I don't have to do it myself anymore. This chart basically shows that you've got these massive swaths of investable assets. And so if you look at it and you think about just gold and where that is right now and where Bitcoin is. So looking at this chart, I'm going to pull it up here for a second. But looking at that world, a universe of investable assets, you've got gold is about 618 trillion. It's closer to getting 18 and moving up towards 20 now, but you've got art, which is about 18 trillion, cars and collectibles. You've got your equities, which are your true risk assets. That's fluctuating around close to 105, 110 now. But real estate of 330 trillion, bonds of 300 trillion, and then you just got your cash money market accounts and whatnot of 120 trillion. So what am I talking about here? Well, you've been seeing a lot of different products come out that are looking to start incorporating Bitcoin as part of collateral for loans and things like that. And you may have heard Andrew Hones talk about the Bit bonds, and he made a presentation recently about Bit bonds, and I actually wrote about it in the Informationist. And it's basically having a portion of whatever Treasury capital the Treasury raises by issuing bonds. They take a portion of that and buy Bitcoin with it and augment the returns of the bonds for both the investor and the Treasury. So, but what I'm talking about here is that Bitcoin to this point has just been treated as a risk asset. But as we continue down this path of just reckless spending, and now we'll back up for a second, hit the pause button here, that we have the Doge Commission, and Trump and Musk are out there cutting costs dramatically, and they've cut about $200 billion of costs annually so far. That's a lot. It's not enough. The problem is structurally, we don't make enough money to pay for the outlandish spending that we have. But part of it is, Luke, that it's spending that we can't cut. It's things like interest on the debt, right? Which is over $1 trillion now. It's about $1.2 trillion. And then, Social Security, Medicare, Medicaid, and things like that. Those are liabilities that are signed into legislation. There's only so much you can cut out of that through administration. You're cutting the administrators and the fat. You're cutting out the Social Security checks to people who are 250 years old. But there's not enough in there to cut it back by $1 trillion. So we're going to continue to run deficits. That's just reality. The only way that we're not going to run deficits is if we have inflation and significant inflation. I'm not talking about 3, 4%. I'm talking about a period of 8, 10, 12%, or maybe even more, where you're literally inflating away that debt by allowing for that inflation to create nominal growth in GDP. Now, everybody talks about the AI revolution, right? And how that's going to be great for productivity. Sure, it's going to make people more productive, but it's also going to take away certain jobs. And so the question is, how deflationary is AI? And what kind of levers do the central bankers have to pull in order to continue this charade of expanding the money supply? Because if you have lower GDP and lower prices of goods, well, how do you get rid of all that debt that you've piled up that was at a GDP that was way higher, right? So they have to continue to expand the money supply. There really is no way around it. So this is a long way of saying that because of that, you're going to see eventually you're going to see the people who understand Bitcoin and understand it as a true store of value to start to take some of their capital they've allocated just to risk assets, and some of the capital they've already started doing that, but eventually they're going to take some of that capital they've allocated to bonds and real estate, that they're using those as store of value. Now, real estate has all kinds of uses for it. Bonds have tax and advantages and other uses for it, but for that amount that's being just used for store of value in either U.S. Treasuries or in real estate or other bonds, the high, corporate bonds that are AAA corporate bonds, things like that, you're going to see eventually people say, my God, I'm I'm only making 4, 5, 6, 7% on these, but the real rate of inflation has been over 7% since 1971, and it will, in my opinion, grow significantly higher when we have an event that demands another large print of money. And you've seen Larry Lepard's book, The Big Print. I don't know when that happens. Larry and I kind of debate about that. I think it happens a little bit further along than he does, but we both have the same thesis that it's going to happen. We're going to have a big print, way bigger than the 5 trillion they printed last time. So the money supply expands, and that means that as that expands faster and at a higher rate than what you're getting on your bonds, you're getting a negative real rate of return. And so investors are going to demand a higher rate of return on those bonds, or they're just going to take money and reallocate it. They're reallocated into things like into Bitcoin and specifically out of bonds eventually because it's a better store of value. And secondly, they'll look at real estate. The real estate they're using as store of value, they'll take money from that allocation and put it into Bitcoin. Why? Well, it's true that it doesn't have cash flows, and it doesn't pay you dividends. Eventually down the road, I think Bitcoin will offer safe services for borrowing against. But for now, they'll use Bitcoin rather than real estate because, and not all of it, I'm just saying portions of that allocation that is set aside just for store value, right? So people invest in real estate because real estate goes up as the money supply expands. We know that. But there's no, why would they choose Bitcoin over it? Because it's super liquid, super easy to transact in. There's no maintenance cost. There's no headache of dealing with tenants or oversight or anything like that. You just put it in Bitcoin, leave it and wait. You just invest it and walk away, you know? So that's really where I think that this world is headed in Bitcoin eventually. We're not there yet. It's going to take some time, and we're going to have to decouple from the risk assets for that to start happening. And we'll have to have a real broad understanding and adoption from institutional investors for that to start, in my opinion.
It's a really great breakdown of everything going on in the world. I typically agree. A lot of people look at Bitcoin and they say, oh, it's just digital gold. That's all it is. But like you
Right.
say, there's $600 trillion of capital out there that is looking to escape the inflation spiral that I also think is going to come in the not too distant future. It's the only way governments can get out of debt, inflate
Mhm.
away their debt. And I saw you write about BlackRock recently. And I did see BlackRock recently added Bitcoin into its model portfolio. I love the
Right.
entire breakdown you did in that article. You showed the pivots of BlackRock over the years and how that chronological timeline has changed. But James, do you think with BlackRock recently adding Bitcoin into its model portfolio, do you think this is maybe the beginning of Bitcoin beginning to decouple from risk assets and be seen in a different light?
That's a good question. I think that that first step is people seeing it as kind of like, oh, they're adding it to model portfolios. It still kind of reinforces that digital gold narrative. But until when they start adding it to portfolios that are not just portfolios with alternative investments, when they start adding it to portfolios that have long-term store of value and kind of that 60/40 portfolio mix that they may have, well, that starts to change the narrative in my mind. Um, what it does do, though, Luke, is and that's a really good point you bring up, is that it it informs uh, the investors, the managers, investment managers, RIAs, and other managers who are in charge of other people's money. It gives them the green light to start looking at Bitcoin as an allocation as well for them, for themselves, because in two ways. Number one, they can just look at it and say, well, I use the BlackRock model portfolios for my investors, and that's how I allocate to different exposures. And so it's in there. And so I just give the breakdown and allocate that 1 to 3% in those portfolios, just like they say to. Another thing is they could just look at it and say, look, well, BlackRock's doing it. And BlackRock has this IBIT and big ETF, and you can see the holders of that ETF and of the Fidelity FBTC and Bitwises. You can see that the holders there, and you've got some institutions there now. So people are starting to catch on, and it's starting to get to the point where, Luke, you have to start doing research here. If you're an investor, if you're an investment manager and you haven't done any research on this and you've just been shutting it off and saying, no, 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 the Wall Street Journal or CNBC says it's bad, that it's just a Ponzi scheme, so I'm not going to look at it. Well, you're doing a disservice to your business and your investors. You're acting against your fiduciary duty. It's up to you to be curious and to look into these things. It's now near a $2 trillion asset. It's been $2 trillion and it's come back a little bit. And and it has overtaken basically every single asset in the world, but eight of them. It's a top 10 asset in the entire world. And if I bring this up, and you'll see this also, we'll bring this one up here, Luke. We'll bring up the largest assets in the world, and you've seen this one, this breakdown, this chart. Bitcoin's right now at number 9. It's right behind Saudi Aramco, which is the largest oil and gas, energy company in the world. And it's right behind silver, which it had crested once and it's come back. But what are the assets that are bigger than it? Gold at 20 trillion. Yeah, see, it's $20 trillion now. Apple at 3 trillion. you know, Microsoft, Nvidia, Amazon, Alphabet, all at two trillion and change. And then you've got silver, Saudi Aramco, and Bitcoin. Bitcoin's bigger than Facebook. It's bigger than Berkshire Hathaway. I mean, no wonder you hear Warren Buffett. It sounds like he's got a thorn in his side on that. Maybe it's hurt his ego a little bit. It's bigger than Eli Lilly, Walmart, J.P. Morgan. It's bigger than J.P. Morgan. I mean, no wonder you hear Jamie Dimon frustrated about it. This is not going away. It's becoming an allocation for people. They just have to understand it better, and it will decouple. When that happens remains to be seen. But I think that there's two big things that have to happen. And one of them is for broad understanding institutionally, investors institutionally understanding it. And then that reallocation of those store of value assets into Bitcoin. And that's going to be, I think, the key.
I think we're slowly getting both of those points satisfied, James. I think we're slowly starting to see these institutional investors have to research Bitcoin. Like you say,
Yeah.
I just want people to appreciate how big of a deal it is that Bitcoin's in that top 10 largest assets around the world. I mean, there's 58,000 public companies. Bitcoin's in the top 10. It's 16 years
Yeah.
old. It's
Yeah.
crazy.
It's crazy. I mean, just go down the list. It's bigger than Exxon, MasterCard, United Health, Oracle, Costco. I mean, it's massive. This is not going, this is just, it's gathering assets. And it's global. And one of the, and it's just, now you've got an administration that's adopted it, that is pro Bitcoin, pro crypto, and that's also a signal. So, I mean, we'll see how quickly it does evolve here. Part of it, we're in this uncertain period in the economy, and so people are taking some of their capital off the table because they're worried about the market drawing down, which it already has quite a bit. Bitcoin's already drawn down 30% from its all-time high. So, I mean, it's this is an interesting period, and we are, and as you know, Luke, I'm a co-managing partner of the Bitcoin Opportunity Fund with David Foley, and we're excited. This is a great time for us to be investing. We've got, investors that we just launched Fund Two, and you and I can talk about that now or a little bit later. But people are nervous, but they're nervously excited. The ones who, especially the ones who invested with us last time, because our first fund we launched right at the depth of the bear market. I mean, it was what we call a bear market raise, where, it was right as FTX was collapsing, and you had the Sam Bankman-Fried fraud. You had Celsius debacle. And so people were scared to death. And we somehow cobbled together enough capital to open Fund One. And we've done great there. And our investors are super happy. We've returned 82% net of all fees and associated with the fund. That's all fees, net back to the investor in just 5 quarters. And so people are excited, and a lot of those people are investing in Fund Two, and so yeah, and we just see a ton of opportunity out there, and we're excited. We're actually super optimistic.
Well, I'm curious, how does a 30% correction in the price of Bitcoin in a matter of only weeks affect investors' appetite? Because, like you say, you're launching Fund Two now. Price of
Mhm.
Bitcoin's just ripped from 16K to about 106K nearly. How is that, investor appetite different this time around?
Yeah, well, it's just that classic emotional response to the market movement. You have that FOMO and you have the fear, right? You have just the pure fear and the fear of missing out. Well, as Bitcoin ripped up over $100,000, I had everybody was asking me, "Hey, what's going on with Bitcoin? Should I be buying it now? Should I?" And I'm like, well, I've been telling you to buy it since it was at 17,000. So, I mean, sure, you just always buy a little bit, but why didn't you talk to me when I was raising my fund back 2 years ago when I told you that he was at 19,000? But look, reality is that's just human nature. If you have Black Friday here, Luke, which is that day after Thanksgiving where everybody has the day off and they go to the stores here and they get all the big sales, or Cyber Monday, the next Monday, they're literally crawling all over each other to get a TV that's been marked down by a few percent. But it's crazy because you have a sale in the stock market and they get scared and like, oh, I don't want to buy it now. You have a big sale on Bitcoin, it's down 30% from its high. And they're like, oh, I don't know, maybe I should wait. It sounds like it's going to go to 30 again. So, it's just one of those things. It's a natural response. And that's why as investors, it's hard. It's not easy to look at these charts and to think, wow, this really could come back to the 50, $60,000 level if we have a steep drawdown in the overall market. There's always that possibility. And then you stop. And as an investor, you have to stomach this. This is where it's that famous quote from Rothschild, where there's blood in the streets. You should be buying even if it's your own. And or you should be buying even when there's blood in if there's blood in the streets, even if it's your own. And that's kind of how you have to stomach it as an investor. But on the flip side of it, it gives you great opportunity to adjust to higher beta positions
Mm.
because meaning stocks and investments that are more sensitive to the Bitcoin price moves because you've had that large drawdown, and so now you get the advantage where you can reallocate to some higher beta opportunities, and so that's what you do. You just try to find those spots. Um, it does worry me for some of these smaller companies that are super young and super new and are not revenue generating, the more, real early VC type stuff, that it's harder to gather assets and to get investments in these periods. Um, but that's the nature of that game.
I really like that you brought up higher beta plays for Bitcoin. I hope I didn't look too distracted, but I quickly pulled up the chart of MicroStrategy and
Yeah.
peak to trough.
I was wondering if that's what you were doing.
Yeah. Great minds think alike, James. Yeah, I pulled up the stock and it says it's down peak to trough 58%. So Bitcoin's had a 30% drawback, but MicroStrategy, because it's so much more volatile, that thing gave you a 58% discount. And I really love the analogy that you drew between Black Friday and Cyber Monday and people thinking about stocks and investments slightly differently. I would love your thoughts, James, on MicroStrategy.
Yeah.
Everybody's kind of talking about this infinite money glitch that Michael's created, and so many other companies are copying him, just aggressively hoovering up as much Bitcoin as they can. What are your thoughts on the strategy overall, and a little bit of the FOMO we've seen amongst the other public corporates looking to do the same?
Yeah, I mean, I'm looking at the my portfolio, and look, MicroStrategy's been our largest holding in Fund One for a while. And there's a reason for that. It's not that we're brilliant, it's because they're brilliant. So what happened is Michael and Sharish, his treasurer, quickly figured out this, what people are calling a money glitch. They actually hate that term, but what it is they figured out um, how how to add Bitcoin to the balance sheet and do it in a way that created volatility in the stock, which gave them the opportunity to monetize that volatility. So what do I mean there? What I mean is they used the capital in the company, issuing shares, issuing convertible bonds, and getting cash, and then turning around and buying Bitcoin with it. Okay. They kind of had this, they struck, they had like lightning in a bottle here, Luke, because what they had is a revenue generating underlying business that they could borrow against with a typical convert, which they did. And then they took a lot of that convert and went and bought Bitcoin. And then they created volatility in the stock with that Bitcoin. It got some people nervous because those early converts they were paying paying a coupon, and they were secured with, they were secured with assets, and so people were a little bit nervous there. But then he kind of, you know, walked that bridge and got across, and then started really buying a lot more Bitcoin and borrowing and borrowing and borrowing and buying more Bitcoin. So what happened? Well, what he was doing is he was putting Bitcoin in the balance sheet. The underlying stock became sensitive to that Bitcoin movement because now the company was basically valued against how much Bitcoin they owned. And so as Bitcoin's doing this, MicroStrategy is doing this. And so it was great because when you borrow with a convertible bond, then you have kind of two things that are attached to that bond. First of all, it's the coupon. And so how much are you going to pay investors for lending you that money? And then second thing is the conversion price, where that conversion is, where it converts that at what price of your stock. And so that's optionality. So because the stock became so volatile, the buyers of those bonds didn't demand to get a coupon. They're like, oh, we want the volatility of the stock because what we want is that upside optionality because we believe that Bitcoin is going to go up over a long period of time. That means MicroStrategy is going to go up over a long period of time because it's attached to the Bitcoin price, and that we can then also trade around that conversion in something that's called delta hedging. So when you buy a convertible bond, there's an amount that's optimal to hedge at any price at any given price according to that bond. So as the Bitcoin price moves, MicroStrategy price moves, and then you can buy and sell MicroStrategy shares as an arbitrage trader in these bonds and make some money around that. So that's it just created this volatility that created optionality, which is value. So, and he was able to monetize that. He was able to monetize it by selling these convertible bonds without a coupon, with a conversion rate on the MicroStrategy stock that enticed investors to buy it without that coupon. And then they would go out and delta hedge around it, delta trade around it. And then eventually they were converting these bonds into common stock and making money off of it that way because they were in the money and they made a bunch of money on the upside optionality. So that was the brilliance around this strategy. And when Sharish was explaining how they were doing it and why it made sense for them, we immediately realized this is kind of exactly what I said, lightning in a bottle. And they have something that a lot of other companies can't do. And they have it because they were large enough and they had revenue to start the whole process and a balance sheet that they could really start borrowing against pretty quickly. And now he owns 499,000 Bitcoin. I mean, it's just mind-boggling. He's quickly becoming the largest Bitcoin owner in the world. He owns over 2.5 times what the United States owns. Mind-boggling, right? So, but it's been an interesting journey, an interesting trade. So then people say, well, how do you know if it's the right price then? Well, that's a good question. And the answer is, I believe that it will trade somewhere around a 2 times multiple to the underlying Bitcoin. What do I mean by that? I mean that if you take all the Bitcoin that's on their balance sheet and you add it up, multiply it out, and you add it all up, right now it's trading at about $41 billion worth of Bitcoin. I'm sorry. Yeah, $41 billion of Bitcoin. Then if you take all of those convertible bonds and you convert them into common, you just pretend that they're all converted into common shares. So this is called the fully diluted conversion. So you take all of their common stock and you add up all of those fully converted convertible bonds, you would get about $80 billion worth of market value in stock right now, which gives it about a 2 times conversion. Well, why does that make sense? It makes sense because Michael said he's going to continue doing this until he owns about 1 million Bitcoin. That's his goal, right? And he wants to continue doing this. So as he continues to do that, what happens? He borrows money from the general market, from investors with a convertible bond. He takes that capital and he goes and buys Bitcoin with it. Well, when he does that, it's instantly accretive to the stock because is he buying 100 million, he's borrowing $100 million, goes around and buys $100 million worth of Bitcoin. Well, because he's at a two times multiple, his stock goes up by $200 million. Otherwise, it doesn't it would contract, right? So that multiple would be contracting. Well, why is that multiple key? Well, if you look at his goal over the long period of time, he talks about being the largest Bitcoin bank. He wants to be the Bitcoin bank basically, and he'll be able to. He'll have 1 million Bitcoin. He'll be the largest holder of Bitcoin in the world that we know of outside of Satoshi, and he'll be able to create products around it with lending products, collateralized products, whatever, and he'll become a Bitcoin bank basically. And so it won't be unlike a JP Morgan, except just in the Bitcoin space. And so if JP Morgan warrants an over two times multiple to its book value, then why wouldn't MicroStrategy or strategy? It would. So that's my, thesis, and that's how we look at it. And when it comes back down under that two times multiple, we think it's an attractive stock. And when it goes above it, if it gets high above it, like at one point when the stock was up over $500 and got way past its normal multiple, we were selling calls up there, and we were unloading a little bit of stock because it just got ahead of itself. And then as it came back, we bought it back in, it's something that we want to hold for a very long period of time, and it's a core position. We're going to keep holding as a core position unless something changes.
Kudos to the fund for holding MicroStrategy because that really has outperformed Bitcoin in a pretty big way. I was talking to the guys at Simply Bitcoin about this just earlier in the week, and they're like, "Hang on a minute, MicroStrategy's gone from $1 billion of market cap in 2020 to peaking out at about $90 billion in early 2025. That's nearly 100x. And in that time, Bitcoin's done well. It's done about a 10x. But again, this kind of highlights how these higher beta plays can really juice your upside, which is very interesting. Now,
Yeah.
speaking about MicroStrategy, you did mention that MicroStrategy holds nearly 500,000 coins. That's more than double than what America holds. And I'd be really interested in your thoughts on two particular topics. Maybe we hit them on two different questions, but I'm really interested how the Bitcoin Strategic Reserve plays into this. Will they try to copy what Michael Saylor has done and really start aggressively accumulating Bitcoin? You also mentioned Bit bonds earlier. So I'd be really interested in maybe your thoughts firstly on the Bitcoin Strategic Reserve, because you did also write a really good email on that in your newsletter that everybody should be subscribed to, The Informationist. So maybe give us a little bit of a breakdown of that Bitcoin Strategic Reserve and your thoughts on how that's going to evolve.
Yeah. So what was signed into executive order was a strategic reserve for Bitcoin that basically said that the U.S. is going to hold the Bitcoin they already have, and that they've acquired through seizures and from fraud and illicit activities, illicit and illegal activities. So, which is about 200,000 Bitcoin. They sold about 200,000 over the last 10 years. Mind numbing that they did that, but they basically this executive order that Trump just signed a couple weeks ago said that they won't sell anymore. That's great, but they also don't have a function to buy it without um, they don't have a function to buy it outright and using government funds to do that. So it has to stay budget neutral. And that's basically what it said. If they can only acquire it if it's budget neutral. Well, how could it be budget neutral? Well, there's a lot of different ways you can do that, but one of the obvious ways is that at the same time that they created the strategic reserve, they also created what's called a digital asset stockpile. And that digital asset stockpile is all the other things people that are in our space like to call shit coins. But the reality is some of those things do have some function. It's indisputable that things like Solana have some sort of function. I don't know what the function is for XRP, but but you've got other things in there, ETH and Solana, XRP, and maybe some Cardano, whatever it is that they've seized. That's kind of a rounding error compared to the Bitcoin seizures. So they've got those, but they don't have any function to add to those except for through seizures. And so, because of that, that they're not going to be adding to those stockpiles. They'll probably be looking to unload them, and that would be an easy way to just sell those and buy Bitcoin at some point. That's one thing. The second thing is Cynthia Lummis she's just reintroduced her Bitcoin Act, which is that the original brainchild of this strategic Bitcoin reserve that she came up with a couple of years ago. And that is for the United States to buy 1 million Bitcoin, about 200,000 per year for 5 years. And so there's that, though, has to go through a legislative route. That has to go through, kind of a gauntlet to get there and be approved in the government. Through the Congress has to approve it. That's going to have to go through committees. It's going to have to, have comments, and it's going to be it'll probably have concessions in it. It won't be exactly what we see it looks like today. It'll be something different. So, but that's kind of the long-term thinking, is that bill will eventually get through, and that'll enable the United States to be buying Bitcoin through that. That's the obvious way, eventually.
Now, before I show you the rest of this rabbit hole, just want to remind you guys, if you wanted to join in on the fun and also buy some Bitcoin, we always encourage you guys to check out what Rhino Bitcoin is doing. We call them the all-in-one Bitcoin super application for very good reason. They're the best place for you guys to buy your Bitcoin, but you can also sell Bitcoin on Rhino. You can send Bitcoin anywhere around the world using the Lightning Network on Rhino, and they're even giving you guys $10 of free Bitcoin if you sign up with Rhino and use a promo code Bitcoin News. So we always encourage you guys to check out what Rhino is doing. I reckon eventually, the old technique, James, the old foot in the door sales technique. Once you get your foot wedged in that door, you are in. And I kind of feel as if, yes, today they're talking about it being budget neutral and they don't want to create a bigger deficit to buy Bitcoin. I wouldn't be surprised if in 5 years' time they're just actively printing money to buy Bitcoin. Whether they do that privately or publicly, who knows?
That's right. They get that the camel nose is in the tent. Next thing you know, the camel's sleeping next to you. So,
Exactly.
well, yeah, and that's one way. And then the other thing is the bit bonds, which again is the brainchild of Andrew Hans, and he basically is saying that, look, the United States can buy, they can issue bonds and buy a portion of Bitcoin with them. And that would be a way to also add to that strategic reserve, being budget neutral in that they're issuing bonds to fund the deficit, and so they can use some of that issuance to buy Bitcoin. It's an interesting idea. I think it's going to take a while. I talked to Andrew about it a little bit, but I think it's going to take a while. And but I also think that everybody thought a Bitcoin strategic reserve was kind of laughable just, last year. And now it's already signed into law. I mean, it's an executive order. So, um, you know, uh, things can happen quickly in this world, especially if you get some strong proponents. And Bitcoin jumps back over $100,000, you're gonna have a lot of people, who are actually suddenly in favor of it. So it's absolutely an interesting journey that we're going to be on here. And these are the massive tailwinds that people are just ignoring right now. They are not priced into this stock, into this asset. They're just not priced into it. And so for those people who have been kind of frustrated and bewildered and surprised by this latest move, well, Bitcoin always has drawdowns and consolidates before it has another, leg up. There's uncertainty in the markets. Markets hate uncertainty. We get a little bit more clarity tomorrow with JPOW, which, we won't date this interview too badly, so we won't talk about too much, but people are wondering what's going to happen. And so once that kind of settles out and we get through this little period of uncertainty here, I think that Bitcoin's back to the, off to the races.
Exactly right. In the short term, who knows what's going to happen in the markets? Because I think in the long term, I think something else that I want to get your opinion on is the debt spiral. In the long
Yeah.
term, we are living in a debt spiral. I'd love your thoughts on everything debt spiral related and what impact Trump is going to have on that. Like, I'm seeing really interesting narratives of like Trump and Powell wanting different things for monetary policy. We've got Doge talking about making the government become more efficient. Does that mean we're going to run smaller deficits in the future? Who knows? I just
Yeah.
want to throw the baton your way, James, on that topic of debt spirals.
Well, we touched on it earlier, and the bottom line is our spending is we have we have such high structural spending that we absolutely must keep going, or else we will default. These are, things are signed into legislation, the Social Security, Medicare, Medicaid, things like interest on our debt, and then of course you've got defense spending. Like these things aren't going to slow down. We're cutting administrative expenses, getting rid of people who aren't working. Meaning, like, go find a job where you actually have to do some work and then you can collect your paycheck. I mean, obviously, Doge is getting rid of hundreds of thousands of people. It could reach into, a pretty high number here. But how much that saves right now, it's $200 billion that they estimate. Um, annually. But remember, our deficit's over $2 trillion dollars.
Hmm.
And the reality is that if you look at the first, just look at the first 5 months of spending of the United States, and because remember we start in October, okay? So you and I are doing this interview in mid-March, and so the numbers have come out for October, November, December, January, February. The first 5 months of spending are in the books. And that first 5 months was $1.15 trillion of deficit. That's the deficit. We overspent by $1.15 trillion, which is, and people say, you could say, well, you just take that and you say, well, if it's 1.15 and that's about, we'll call it 1.15 divided by 12, that's about $100 billion. Uh, you know, I'm sorry, sorry, we'll take that. We'll say 1.150 divided by five. That's about $230 billion of deficit spending per month. You multiply that by 12, we're at a $2.8 trillion deficit if you have that run rate. Now, you can't really do that because we haven't hit April yet, and that's where we get a large amount of revenue, and so it'll bring our deficit spending for that month down quite a bit. Um, but you can look at compared to last year, and the same 5 months last year, we spent we our deficit was $318 billion less. So our deficit spending in the first 5 months of this year is up 38%. That's just the reality. So how much Doge can cut, I don't know if they can. I mean, they're trying, but and we'll see what they can do. But this is a massive amount of deficit in the first 5 months of the year. That's the bottom line. We're running over $2 trillion deficit. So what does that mean? Like where do we go from here? Well, there's two paths we can go. We can either try to cut all the spending and try to get into budget surplus that way, which I don't see a path for that. And the reason is because the what I said before, the mandatory spending is already above what our revenue is. So even if you cut down every discretionary expense and you somehow found, $1 trillion that you could save every year, you're still over $1 trillion in deficit. And so what do? Well, you somehow get GDP to expand, right? So you need GDP to expand, but the thing is, the easiest way to get GDP to expand isn't just having some sort of uh, you know, productivity miracle. The easiest thing to do is to have a nominal GDP growth miracle, which is not really a miracle at all. It's just turning on the money printer. So you expand the money supply, and more dollars in the system means more dollars chasing goods, means higher just higher productivity in the GDP. The gross domestic product, gross national product will be bigger because there'd just be more dollars chasing these things. And so your revenue goes up, but it's fake. It's a fake expansion of your GDP. And that's how they do it. It's exactly what it's the quote you said before, which is they have to inflate away the debt. Well, that's how they do it. They create higher productivity nominally through expansion of the money supply, and that helps pay down the old debt. That's where we're headed. We've always been headed that way since 1971. We're going to continue that. It's just a question of how fast and furious we do it.
And by the looks of things, that pace is still not slowing down. It's still accelerating. It still doesn't matter whether it's blue or red in office. I think it's really sobering the numbers you laid out there, because I think some people are under the impression, Trump and Elon, they're cutting all of this unnecessary spending. I
Which is
didn't,
great. I love
yeah.
it. It's great. We should be, but a little bit of reality check.
Mm.
Look, Pomp thinks we can get into a surplus. I had debate about this with him on stage a couple weeks ago. I just think the only way we can get to surplus is through nominal growth, not through actual GDP growth.
Yeah.
That's my feeling.
Look, I mean, but the pure maths, the pure reality that you just laid out that I wasn't aware of. I wasn't aware the deficit was still this bad. That kind of tells you everything we need to know. Trump's been in office for 5 months. We're still running $1.1 trillion deficits over 5 months, which is crazy.
Insane. It's insane. Yeah.
I think it's a beautiful note to end today's interview on. That thank God we got Bitcoin. Bitcoin is our little own personal escape valve. So, James, I wanted to hand you the mic one last time. If there's one topic or one thing that you think people are not paying enough attention to, that you think they should be watching for the rest of 2025, I'll give you the floor. And if you don't have anything, you can tell the listeners where they can find you online.
Yeah, no, I think that the my message is to understand how Bitcoin is different. If you don't understand that, keep reading, keep doing your research on it to understand how it is different from all the other cryptocurrencies and why it is a true store of value. Um, really quickly, the way I see it is that Bitcoin, and you've heard me say this before, and I think Michael Saylor says something very similar, but it's backed by 175 terawatt hours of energy, which is the equivalent of 20 full-scale nuclear reactors running 24/7 around the clock. And why that's important is that's what backs this protocol. So it's literally nation state resistant, and that's how safe it is. And so that's why it's a strong store of value. There will never be any more created than 21 million. And it is an extraordinarily secure network that's completely distributed. It's totally distributed. So it's decentralized. Okay. You know that, then don't be, just try not to be scared of the volatility. Embrace it. Embrace the volatility because you can take advantage of it, and have a long-term view on it. And that's how we look at it in our fund. We look at these things that we buy as long-term investments. One of the differences of how we invest versus the typical VCs is that Luke, we're looking for real companies with, real revenues and real profits. That's our meat of what we're investing in. So it's like we're looking for 3 to 5 year maturity in these plays, typically maybe 2 to 3 years in some of them. Um, the VCs are looking for a 12 to 15 year payout, really. I know they're 10-year funds, but these companies, they take a long time to mature, especially when you have, interim markets like this, and it's difficult for those companies to grow. But, um, you know, that's why we're so excited is we see these periods of volatility and then downswing and upswing, and we're super excited about that. And that's exactly why we're launching Fund Two. We were actually approached, Luke, by a couple of family offices who wanted to be in Fund One, but it was closed. So this second fund is open. It's going to remain open. We're gonna accept investors every single month now. And the only difference between this fund, Fund Two, and Fund One, is that you have to be an investor in this fund before we make the private investments to get allocations to it, because they have to be side pocketed. That's the only way you can do an evergreen fund that's fair for everybody. So, but that's why we remain super excited, and we're optimistic about it. Yeah, and then
Okay.
finally, you can obviously I'm on Twitter, and if you're interested in the fund and you want to have more information about it, go to www. Bitcoinopportunity.fund, and there's just fill in your info, and we'll reach out to you. We'll get you some info on it. But most of your listeners know that I'm on Twitter at James Lavish on Twitter, and I write the Informationist, the newsletter on Substack that just simplifies one kind of complex financial topic like we've talked about here every single week, just once a week. There's a free version, and that one comes out once a month, and then there's a paid version that comes out every week. So, but that's it, Luke. It's been great talking to you, and I really appreciate it. Always fun to talk to you.
Always great to talk to you as well, James. I think before we got started today, I said I normally like to keep the interviews to about 30 minutes, and we've nearly been going for an hour because I literally could talk to you for hours. So I really do enjoy catching up with you. I highly recommend people check out your newsletter. I do think it's criminally underrated. And, if there is any people out there looking to get a little bit Bitcoin curious with their investments, I think Bitcoin Opportunity Fund's the place to go. Because who else is running that with you right now that you
So David Foley and I are the co-managing partners, and then we've got our advisory partners are Larry Lepard, Larry, Mark Moss, and Greg Foss. So, but yeah, we're having a ton of fun doing it. It's a super interesting period of time to be investing in this space. So.
That's a dream team right there. Moss, Foss, Larry, yourself, and David. I like that.
We're just in the trenches. That's all we do.
Okay, I highly encourage the people to go and follow James online if you're not already. And James, thank you so much for your time.
Awesome being here, Luke, and thanks for having me.